Thank you. Good morning, everyone. My questions are about equality and distribution of the tax burden. And as we all know, the last 10 years has seen largely a wage freeze, some inflationary pressures then putting further pressure on income growth since 2016. And we know that the UK has one of the highest rates of income inequality in the OECD, while the extent to it redistributes income is roughly average. So starting with Professor Booth, where do you think, and what do you think is the scope for reducing income inequality through the tax system, and how do you think that could be done without doing damage to economic growth?
Okay, well, it's your second question really, which poses the difficulty, because the extent to which you can reduce income inequality through the tax system is almost total. You could have a total equality of misery if you raised all taxes to incredibly high levels and reduced economic activity, to be slightly facetious. So your second qualifying question, I think,
don't be facetious, Professor Booth.
No, I'm not. Sorry, I tried to make that point about the first question to illustrate how important the second aspect of the question is. Really, that's because to reduce inequality significantly, whilst at the same time reducing the incomes of the less well-off would not be a sensible policy. So I would prefer to try to increase the real incomes of the less well-off by means other than through the tax system, because of the damage that tax can do to economic growth. And there is one very easy win there, which is by liberalising the land use planning system. Government's made some proposed steps in that area. We'll see how they get on with that. In order to reduce house prices and hence rents to the kinds of levels which existed historically in the UK before the 2000s, and also which exists in other countries in the Western world. And if you look at the increase in incomes of the bottom decile before housing costs, the increase in incomes is about half the increase in incomes after housing costs, because of the huge impact of housing costs on that group of people in particular. So you could increase the net real incomes of disposable incomes of the least well-off probably by 25% or more if we had a housing market which functioned properly. And then there are other areas, I think, of product market liberalisation, which would also would disproportionately benefit the poor. Again, an obvious one here is in relation to food policy. And outside of the European Union, I didn't vote for Brexit, but one of the advantages of being outside of the European Union is that we can remove tariffs on all food imports and other things, which again, the poor spend a disproportionately large amount of money on. So given the damage that can be done to economic growth through taxation, including the damage that can be done to the least well-off, given the already very high rates of very high proportion of tax, especially income tax, that the better off already pay. I think Paul once described the UK's tax base as dangerously narrow. I think that the main focus on trying to reduce inequality should be through other measures, and there is one obvious measure which is easily available, which would benefit everybody, but the poor disproportionately.
Brilliant. Thank you so much. I'm just going to, can others quickly pick up on other such ideas on this? Mike and Gemma, and then Paul.
Yeah. Okay. Thank you. If I start, I mean, first of all, as a matter of record, most of the redistribution that's done in the UK is done through social security benefits and tax credits rather than through the tax system, income tax and national insurance. So yeah, the actual effect of the tax system alone on income inequalities is fairly small in the UK, as it is in most countries. However, I think there is a very strong role for the tax system in affecting inequality at the very top, where the amount of incomes that people are receiving and declaring, we know, depends quite considerably on the tax system. So we've seen proposals from economists all over the world to charge much higher rates of income tax on very, very high incomes. So we're talking about people in the top maybe 0.1%, 0.5%, and not at all a wide tax base, and proposals for wealth taxes. Again, not widespread wealth taxes, but taxes on very, very high rates of wealth. And I think there's good evidence that it's been shown that high rates of income tax on the very, very well-off do not seem to be related to growth rates in the economy at all, but they are related to the share of top incomes. In other words, how much incomes that the economy generates goes to those at the top. So the tax system has a minimal, fairly low impact on inequality overall, but has a really large role to play when we think about those at the very, very top of the distribution.
Thank you. Gemma Tetley.
I don't think I particularly have anything to add on that.
Okay. Paul, did you want to add anything on that?
Yeah, I think I'd agree with most of what Mike said, but I think it is important to be clear about inequality of what we're looking at. I think taxes to reduce inequality among the bottom 99.5% in terms of income, probably not much that you would want to do. The top 0.5% perhaps. But you're looking at wealth inequality as well, or inequality between generations, then I think there probably is at least a limited amount additional that the tax system could do. I don't want to overstate what is possible through the tax system, but I think we do need to think about inequality more broadly than of earnings. I think we spend too much time thinking about earnings and not enough time thinking about other things.
So I was going to come on to that, but if you could just address that, could you say what else could be done if we were looking at more broader forms of inequality, wealth as well as income inequality?
Well, I mean, there are elements of the current tax system which allow people to drive a bit of a coach and horses through efforts to tax wealth or forms of wealth. We've talked about council tax already, which is absurdly generous to people towards the top. Capital gains tax, which is at low rates with high allowances and is forgiven at death. All sorts of ways of avoiding inheritance tax. Now, there are legal as well. I mean, there are barriers to changing some of those things in terms of actually getting people, particularly those who really do have large amounts of wealth, actually to pay. And I don't think we should underestimate those. Lawyers working in this area tend to be fairly confident that pretty much whatever you choose, try and do, there will be a ways around it. So whilst I think there's plenty to explore there, one should have at least some skepticism about how much one can achieve. And frankly, should probably spend more time with lawyers than with economists if they actually want to achieve.
Okay, so just a final question, which is, could any of you see the prospect of us tackling the fiscal legacy of coronavirus and long-term public spending pressures while only raising taxes for those earning the highest incomes and potentially other forms of taxation to do with wealth, rather than taxing middle and low income earners, or is that going to be impossible? We would like to pick up on that. Mike.
I don't think that's possible. I think the amount, the sheer quantities of money that one's likely to be looking at, which I think are, 2-3% of national income every year, you certainly can't get that through wealth taxes, and I don't think you can get that from the very top. If you look at other countries, they tend to have higher levels of tax on middle earners and high middle earners as well. So I think you can get more from the wealthiest and the highest income, but I don't think you can get anything like actually the quantities that are likely to be needed over the next decade.
Most countries have
introduced. Sorry, Mike had his hand up, and then Philip.
Okay.
Thank you very much. I was going to say the same thing. So no, we can't. There's no way we can raise that amount of money from such a small number of people. And I say this, despite working at Resolution Foundation, which like you, has pointed to the high rates of income inequality in the UK, the very weak growth in living standards for those at the bottom. We would love to see fiscal consolidation done in a way that doesn't make things worse for those lower middle income households. But we recognise that that's not possible, and so we're going to need some broad-based tax rises to get us out of the situation we're in.
Philip, you had your hand
I
up.
mean, few wealth taxes have stood the test of time, and in fact, in the UK, for all the problems we might have with inequality or lack of opportunity at the bottom end of the income scale, we do actually have much lower levels of wealth inequality than in most other Northern European countries, Holland in particular, but also Germany and Scandinavian countries. So I think that I think a wealth tax is a totally inappropriate place to start. Now, Paul has mentioned so. Paul has
So I
mentioned.
was just going to say, could we do more to deal with tax evasion and tax avoidance? I know lots of steps by successive governments have been made.
Yeah. Well, I mean, the government now regards the tax gap as pretty small in terms of formal avoidance and evasion, but there are areas which we discussed before, such as having a more rational and logical tax on property, whether it be a user services tax or some other form of tax, which would almost certainly lead to those in larger, more valuable properties, including, I should say, overseas owners of property paying more tax than they currently do, including also on unoccupied property. So I think a wealth tax would just be another arbitrary addition to the tax system, but there are other things that we can do which might have similar distributional effects as a wealth tax and actually make the tax system slightly more cleaner and more neutral than it currently is. The IFS actually was formed in 1965, partly as a result of a reaction to capital gains tax being introduced. Paul has mentioned the equalisation of capital gains tax rates a couple of times. It is true when income is hidden somehow as capital gains that the right thing to do technically would be to tax it at the same rates of tax as you tax income. But a lot of capital gains actually arise from the anticipation of future income or from the retention of past income within corporations, which lead to increase in share prices and so on. And capital gains tax in those circumstances can be a double tax. So I would prefer the Treasury to sort of redouble efforts, if you like, to ensure that income which was hidden as capital gains was really taxed as income rather than see an increase in capital gains tax to income tax rates. I think you might also find that the tax take is quite elastic to changes in the rates as well.
Thank you. I'm out of time. Thank you very much.